Welcome. We're now at the end of April and over 7 months into our Bitcoin dollar cost averaging experiment with 32 weekly buys under our belt. But it's been 3 whole months since Bitcoin set an all-time high of $109,000, and since then, we've had a bit of a scare with Bitcoin dipping as low as $74,000 earlier this month. But lately, there's been a lot of chatter about an imminent blast-off expected for Bitcoin. In this video, we'll review how our disciplined DCA strategy has excelled, especially during these lackluster past few months, and we'll see why many are calling this an ideal time to start or grow your Bitcoin position. If that sounds good to you, hit the like button and let's get started. So just to review, DCA stands for dollar cost averaging, and it means to buy a fixed dollar amount of Bitcoin at regular intervals regardless of market price. In our case, we started on September 16th with an initial seed purchase of $200, and then each week we automatically buy $25 worth of Bitcoin. So now let's take a close look at how our DCA experiment has performed. This table shows each of our 32 weekly buys and the percent and dollar return for each of them. But overall, we've invested $1,000, and at today's Bitcoin spot price of $95,000, that's a gain of $232, about 23.3%, but on an annualized basis, that is 38% return. So I don't know about you, but you will be hard pressed to find any investment that's going to give you 38% annualized returns. And I want to drill into the power of DCA that you can see in this chart. So you can see early on in September, October, when we were buying below $70,000 spot price, those purchases have returned between 40 to 50% based on today's spot. But in November, December, January, when Bitcoin was pumping, it went as high as $106,000 for this December 16th purchase and January 20th purchase. Those purchases are actually underwater with a loss as much as 11% that were down on those investments. But because we kept buying even during the dips down in February, March, and April, it dipped as low as $79,000 on the March 10th buy, which is now up 18% for that buy as well as the April buy. So that's the power of dollar cost averaging, because the typical tendency for an investor is going to be to FOMO buy in when Bitcoin pumps, or freeze and not buy because they don't want to buy high. And then when it starts dumping, they either panic sell or become fearful, freeze up, and don't buy at all. But with our disciplined DCA approach, you see we benefited from on the way up. We did buy on the highs, but we're just down 11% from there. But then we were able to scoop up some cheap sats when Bitcoin had dumped, and now we're up 18% on those investments. Overall, a 38% annualized return is amazing. Now, over just the 32 weeks of our experiment, that's a 23% gain. So let's go ahead and compare how Bitcoin has performed against some other key assets. So this chart shows us Bitcoin versus gold and stocks. And going back to September 16th, you can see that Bitcoin has grown 48% compared to gold, which has grown 26%, and then stocks, which are actually down 2.5%. Now let's go back about a year to April of 2024, and Bitcoin here is up 47%. Gold is up 44%, so just 3% under Bitcoin, but stocks are up 8%, which is much less than either gold or Bitcoin. So gold has definitely been on a wild ride for the past actually few years now. So congratulations to our gold bug friends. And now let's go ahead and look back to 2 years ago just to see the performance of these major assets. Bitcoin is up 222%, gold is up 66%, and stocks are up 33%. So you can see gold, even over 2 years, is twice the performance of stocks, but Bitcoin is almost 4 times the performance of gold. So this is just to give you an idea about how Bitcoin has performed against some of the major asset classes, and just to confirm that Bitcoin is the winning apex asset for wealth preservation due to its provable scarcity and fixed supply of 21 million Bitcoin. Now, I just want to give you a quick update since my last video, which was why now is the time to wake up to Bitcoin. If you remember in that video, I talked about how Bitcoin during the bull runs moves in distinct patterns of periods of sideways chop followed by shorter periods of pump and then sideways chop and pump. And in our current bull run, we have been seeing those sideways chop patterns lasting about 17 weeks and then 5 weeks of pump. Well, where we are right now, we've been chopping sideways since December 9th for 20 weeks so far, and that's compared to an average of 17 weeks, typical for our bull run. So if you remember, we had estimated about 17 weeks of chop to about mid-April, and then a pump that would take us to the next new all-time high sometime in May. Well, right now we're about 3 weeks behind that schedule, but that is within the range because during this bull run, the sideways chop has lasted anywhere from 7 to 32 weeks. So we are right on schedule for a pump. And if it was a 45% pump that we're going to see, which is the average amount, that would actually bring us into around the $150,000 range. So that is definitely still on track from the last video with perhaps a 3-week delay. Lastly, I want to call your attention to the relationship between Bitcoin price and global M2, which represents liquidity of monetary supply. This relationship was first highlighted by Raoul Pal, but has been explained in detail by Colin Talks Crypto on his YouTube channel and on X. And the great discovery is that Bitcoin price action closely correlates to movements in global M2 with a delay of a few months. Currently, his best estimate is an 80-day lag for Bitcoin price movements following global M2. Based on that, he's projecting a massive Bitcoin pump that started in mid-April and will last for 3 months to about mid-July. And you can see from this chart that the magnitude of the M2 pump in yellow is equal or greater than what we saw from September to December, if you remember that pump. So fasten your seatbelts. We could be seeing a pretty massive pump in the Bitcoin price any week now. In fact, we probably already started it in mid-April. So I hope you see how powerful our disciplined DCA approach can be in capitalizing off of Bitcoin's volatility with 38% annualized returns so far. And with 20 weeks of sideways price action and a spike in global M2, we could be ready to blast off to new all-time highs any week now. So be sure to take action today to protect and grow your family's wealth with Bitcoin. The first step is always to learn more. If you haven't already, watch my series on why you can't afford to ignore Bitcoin. And when you're ready to buy, check out my buying guide playlist. Thanks for watching. Be sure to like the video, drop a comment below, and share it out to those you care about. Until next time, be wise, be safe, and stack stacks.